Eligibility guidelines for Puerto Rico's Act 60 export services tax advantages. In an effort to accelerate economic recovery in Puerto Rico, the Puerto Rican government has provided generous business tax incentives for eligible service industry entities, ranging from accountants and ad agencies to hedge funds and other consulting firms, since the initial iteration of this legislation came about in the form of Act 20 in January 2012. Act 20 stipulated an extremely low 4% corporate tax rate for Puerto Rico businesses operating within the territory's borders on all income received from clients based outside of its borders. So, the first eligibility requirement for businesses seeking the tax break was whether a business owner and its employees could work from Puerto Rico and still provide services to customers outside its borders. In January 2020, Act 20 was replaced with Act 60 export services, which brought changes to the eligibility requirements. Eligible businesses operating inside Puerto Rican borders will receive the following benefits for all income sourced from clients based outside of the territory: a corporate tax rate of 4%, a municipal tax exemption of 50%, a 75% municipal and state property tax exemption, a 100% exemption from taxes on all distributions from earnings and profits. The term operations inside of Puerto Rico means that whatever a business's value or work output may be, the product must have been created on Puerto Rican soil. The following are other key eligibility requirements to consider. Every business owner and employee must be paid a reasonable salary for the work they do. The income that owners and employees are paid must be taxed at the ordinary income tax rate for Puerto Rico. A business cannot pass through all of its net revenue at the corporate tax rate of 4%. Act 60 businesses are subject to independent audits once every 2 years at a minimum by the Office of Industrial Tax Exemption, or OITE. Businesses generating $3 million plus annually are required to directly employ at least one Puerto Rican resident who directly participates in business activities explicitly related to its offerings. Business owners cannot have clients both inside and outside of Puerto Rico and still qualify for the export services tax incentive. To be eligible for the tax break, the legislation says a business must not have a nexus with Puerto Rico. This means the services a business provides cannot be related in any way to the conduct of trade, business, or other activities inside Puerto Rico. Any client of a Puerto Rico-based business must be located outside the territory. Disqualified entities that are considered to have a nexus with Puerto Rico include any business or entity that has participated in income-producing activities within Puerto Rico for other Puerto Rican customers. When a sale of a property for use, consumption, or disposition in Puerto Rico has occurred and the income for those activities is derived from money already inside of the territory. Businesses who have lobbied or directly counseled on the regulations, laws, and/or administrative duties of the Puerto Rican government or its instrumentalities. Entities participating in any activities directly designated by Puerto Rico's Secretary of the Department of Economic Development. There are nearly 24 categories of businesses that are eligible and can qualify as an Act 60 business. Business owners with specific questions regarding the eligibility of their company and other requirements for the export services tax incentive should reach out to us at PRelocate for help.